This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So you've gone through there and worked through that chapter. There's a lot to take on board at this early point in time, particularly when you think it's not going to be a huge amount of marks in the exam, but don't let that put you off. I really think that if you understand the framework in terms of the reasons why it exists, and then linking it into all the qualitative characteristics, the elements, the recognition criteria and the measurements, then you're going to really get a better understanding of all of the accounting standards, all of the group rules that we then see later within the syllabus. So the work and the effort you put in now is really useful. Okay, pardon the pun there in terms of linking it back to what the framework is. Okay, and what information that provides the users of the accounts, isn't it? Okay. I should just get my coat and leave now, shouldn't I? It only gets worse, promise me. So what have we got? A typical example of a multiple choice question. One that's probably a little bit more challenging than what you've previously seen within financial accounting. You know, in financial accounting, it was probably along the lines of, which of the following are fundamental qualitative characteristics, or which of the following are not enhancing qualitative characteristics, or which of the following is the definition of an asset, and you were given similar definitions that you need to go through there and identify which is the correct one. Okay, here you need to know the knowledge in a bit more depth. Okay, you can just have a surface level knowledge in financial accounting, at least that's what I think. So it says, read the bit in bold first. I always think that helps. Which of the following are examples of those characteristics? So what characteristics are we thinking of? We're thinking about the fundamental qualitative characteristics. So you can have is it going through the fundamental qualitative characteristics or the enhancing qualitative characteristics? And here, it goes through there and says at the top, the ISB's conceptual framework for financial reporting identifies characteristics which make financial information faithfully represent what it purports to represent. So, what it purports, what it is meaning, what it is aiming to represent. So, how do we show faithful representation? Well, let's just jump back in the notes. Can I find it? I think it's there. So there's your qualitative characteristics: fundamental, enhancing, fundamental, relevance, faithful information. So that's really important, isn't it, here from this question's perspective, because it is asking us which of the following are examples of those characteristics: accruals, completeness, going concern, or neutrality. Okay. Well, it's definitely not the accruals concept, because accruals is all about how we go through and then look at the financial statements and how we prepare those financial statements. So we prepare them on the accruals concept apart from the statements of cash flows. The accounts also need to be prepared on that going concern basis, don't they? So we have an intent to carry on for the foreseeable future and have no meaning to terminate the business within the following 12 months and cease trading. So, completeness, neutrality, are they examples of faithful representation? Yes. Completeness and neutrality also as well, but not relevant within this question, needs to be free from error. So here you've got number 2, you have number 4, 2 and 4 gives answer B. Okay, there we go. Excellent. So, you don't just need to know what the fundamental qualitative characteristics are or what the enhancing qualitative characteristics are. You need to know what goes into each of those fundamental and qualitative or enhancing, qualitative characteristics. Okay, there you go. The only way to get good, I think, about these framework questions is to keep practicing and practicing and practicing the multiple choice questions, and the more that you see, the much easier it becomes. The other question is bringing us more into, say, a scenario of a small written aspect in your published company accounts question, or maybe even groups, but here we're looking more at published company accounts because it's an application. Okay, an application of the principles outlined in the framework, the accounting standards above. So when we're looking at the principles, if you want to get the easy marks, what I would be thinking about there is thinking back to the elements, thinking back there, is it to the recognition criteria, and also then thinking about the measurement criteria, isn't it? Okay, because if you can do that, that's going to get you enough marks. You could be really clever if you want and then start bringing in the qualitative characteristics, so the fundamentals and the enhancing. Make life simple. Get the easy marks and worry about the higher skills marks later on. Okay, so what you've got there, first of all, we're thinking about IAS2, aren't we? Okay, so if I'm thinking there about IAS2, now inventory, what is it? Okay, it's an asset, isn't it? So if I'm thinking about the elements, I would be thinking about the definition of an asset. It's a resource controlled by the entity that gives rise to an inflow of economic benefits, isn't it? Okay, we control that inventory. It's within our warehouse. We can determine what we do with regards to the sales, so it's under our control. There'll be an inflow of economic benefits because we will go through there and hopefully sell it at some point in the future. Okay, I suppose also what you could go through and begin to think about there is you could begin to think about the income aspect, but again, I just think that's then beginning to get a little bit too complicated in terms of the increase in the asset and then a reduction in the liability. So steer clear of that. Okay, in terms of the recognition, go back to the criteria: probable inflow of economic benefit and measure reliably. Okay, so here it is probable that we're going to go through there and be able to sell it, isn't it? It's more likely than not that the inventory that we have, we will be able to sell it. If we can't, then we'll probably still sell it, but at a much reduced amount, won't we? So that's when it brings in the measurement, which, remember, is the lower of cost versus NRV. Okay, so we're looking at the cost based upon historical cost. NRV is looking at what we go through and sell it at, net of any selling costs, maybe to repackage it or to make adjustments to get it into a saleable condition. So you're bringing in the measurement bases there. Okay. If we're then thinking about, is it IS 16? Your property, plant and equipment. Again, in terms of the elements, we're definitely thinking there about the asset, isn't it? It's a resource that we control. It's our asset. We've bought it so we can control it. The past event is the actual acquisition, and we will generate some economic benefits from using that asset within our day-to-day business, won't we? Okay. If you want it to be really funky, did I just say funky? Funky financial reporting. Does it go together? I think it does, but you may differ. What we've got there is thinking about your expense, isn't it? Because for PPE we charge depreciation, don't we? That depreciation is the reduction in the value of an asset. If you want to take it further, we could have the impairment of that asset, because again, that is the reduction in the value of an asset, which is therefore an expense. Okay. In terms of the recognition, again, probable. It's more likely than not that we will go through there and use the asset to generate some inflows of economic benefit, because by using the building, that's maybe our warehouse. We could have it as our head office. That's all helping to generate wealth for this business, isn't it? By running the business on a day-to-day basis, by manufacturing the goods within the warehouse. Okay. And then there, in terms of your measurements, again, you're looking there, aren't you, at your historic cost versus your current cost. Okay. Historically, cost less accumulated depreciation. Current cost is effectively revaluing it up to fair value, isn't it? Okay. You could also, again, higher skills mark, think about, is it a specialised asset? Therefore, there'll be no fair value that exists, so I'll have to use your depreciated replacement cost. Okay. So that just gives you an idea of what you need to think about, and then you can start writing out the definitions and then applying them in terms of a written question. Okay. Maybe 2 or 3 marks for each in the exam. Okay. The last question that we've got at this point in time is looking at your measurement bases. Okay. Because it says here, real challenge this one. So really into financial reporting territory. In a country where the economy is growing and prices are subject to regular increases, so the price is going up. So if you've got your historic cost, that will be lower than your current cost. Okay, what you have today. Okay, how much would it cost you effectively to replace it if it was specialised? Now, what's tricky about this is which of the following are false. When it says the word not, or when it says the word false, it does get really challenging. So here, what is false when we're using historic cost accounting compared to your current value or current cost accounting? So cost versus fair value. Okay, so what's wrong? So you've got there, if you read through the 4 parts of the question, you can see that there's 2 sides to the argument, isn't there? It's focusing on profits, and it's also focusing on capital employed. Okay. So I personally think that the capital employed is probably easier to look at, because the capital employed is effectively the value of the assets, isn't it? Capital employed technically is equity plus net debt, but we'll see that in your ratio section. Equity plus debt, equity plus your liabilities equal to the assets, isn't it? That's what you use within your business. Okay, that's the capital that you employ. Now, if you have your values that are increasing, potentially maybe due to inflation, you have a growing economy and prices are increasing, then what's going to happen there is that your capital employed will be higher under current values than it will under historic cost, won't it? So what you've got there, okay, is that your capital employed, so think about the correct aspect, your capital employed using historic cost is going to be understated, isn't it, compared to your current value accounting, isn't it? Okay, because this is my value in historic cost, this is my value under current cost, so therefore this historic cost is understated compared to that current value. So therefore, the historic cost is not overstating the value of that asset, is it? It's understating them. So what you have here, what is false, and this is where you need to be careful, is number 4, isn't it? Okay. Oh yeah, you think, yeah, I've got that right, I've got a tick on 2, so I'll go with number 2. No. Look here, I'll circle it again. False. What's false? Okay. There we go. The next one is all about your profits. Now, again, just ignore the requirement or ignore the questions there. If you're depreciating the asset based upon your historic cost, then your depreciation will be lower than if it is at fair value, won't it? So under your historic cost, if your depreciation is lower then your profits are going to be higher. Okay, so let's just say that again. If you're depreciating under your historic cost, yeah, because the historic cost is lower, the depreciation is lower, isn't it? If the depreciation is lower, then your profits are going to be higher, aren't they? Okay, so therefore your historical cost profits are overstated. Okay, they are not therefore understated, are they? Okay, so therefore again you've got to be careful, because phrase 3 is correct, but we're looking at when it is incorrect or false. So that's number 1. So therefore your correct answer, the one that shows which of those comments are false, is 1 and 4, which is B. That's tough, isn't it? Imagine doing that under exam pressure. But the more you work them, the easier it becomes, and the better you become at answering them.